Hey, name's Felix. Today I'm covering Adobe. I'm doing it with my after-work beer, and it's an IPA. IPAs are disgusting, but it's all I got. My brother drinks them. Um, Anyways, I'm just gonna get into Adobe real quick. So, Adobe, the stock that is gonna be disrupted within the next couple years or so. Um, I'm a shareholder of Adobe. I have about 2% of my portfolio in Adobe currently. It's not a big position at all. I I bought at around 240. It's now at 207, dropped by around 13%. Um, yeah, it's not a big position for me. I'm not too scared about it, but here's the thing. Okay. Adobe is trading at 11.6. It's trading as a stock that is going to be disrupted to a certain extent. But I think that if we're going to assume that it's going to be disrupted, it's like it can, like if the market sentiment doesn't switch on that, it can still drop quite significantly. Like, I'm not saying it's going to 50% drop, but at 6, like 7 times P, 8 times P, it can drop to those range, I feel like, if people are going to assume that. And well, if that happens, I mean, and it keeps growing for like a couple quarters, people are going to be like, oh shit, okay. And you could see definitely increase. So then I would definitely keep buying some more. But in this position, I am not sure that I really want to keep investing more. Well, okay, I'm not going to go into that right now. I'm just going to start the actual content of the stock. So we have AR that has been dropping for 10 consecutive quarter. Now that was like this quarter put a stop to that with the acquisition of SEMrush. And then but the thing is that after, for like the TTM, it's going to go back to 10.2%, even including the SEMrush acquisition, for the next couple quarters. And well, not for the next couple quarters, sorry, for the guidance. Their guidance was 10.2, and they have 10.2%. So it went 10.5, 12.5 with the SEMrush acquisition, then it's going to go 10.2. So it does, like, it kind of does, like, true, you know? It goes back down to what it was. And so, no, it will break the consecutive AR drop, but it just drops it for like a quarter. Then it goes back to normal. So it's like, it doesn't do much. And if you don't take it into consideration, it's if you don't take it into consideration that it's 10.2%. So, whatever. It's not looking great. It's not looking great in terms of AR. But one of the reasons that management has said that it was the case is because of their freemium model, which that essentially is their like Canva competitor. And in that, they've grown from 50 million to 90 million users in the last couple quarters. So they've almost 2x'd in terms of users. The Adobe traction, the Adobe amount of people that are searching Adobe on the web, so their like SEO performances are up 35% year over year. That's crazy. Like, that's big. That's a big, like, it's very, very significant. So the freemium model being rolled out, and now it's all on the executive for the execution of monetizing those like freemium. So freemium, if you don't know what it is well, I said it is a Canva competitor, and the Adobe has been rolling out this strategy last couple quarters where it wants to turn these freemium users into paying user by like blocking certain premium features to their Adobe Express model. And so that's essentially it. Now you have Acrobat, and Reader that are together went from 700 million to 850 million users. I hope it's that product. And if it's not that product, I'm pretty sure it's that product. So you're talking about huge growth in the amount of usage of the Adobe products. I mean, I believe in Adobe. I'm not selling those shares at the minus 13%. I was already bought in at like a lower price. I think I bought in, I say 240, but I'm pretty sure 240, 234 range. I can't remember correctly. I'm down 13% right now. It's at 207. So if you want to do the math, 200, so that's $26. That's $26. That would put it, yeah, something. I think it's close to 240 range of average price. Anyways, so the AR has been continuously falling, and for 10 quarters in a row. So that's since like beginning of 2024. That's not that good. That's really not that good. But they've been rolling out this product for a while. And so now if they execute well, it can go back positive. If they keep doing acquisitions like they've done with SEMrush, because realistically, yeah, the growth is slowing down, but they are making more and more money, and it gives them the ability to acquire more and more businesses. That's the reality of the game. It's big fish swallowing smaller fish, smaller fish, smaller fish. But as they get bigger and bigger, the smaller fish that they swallow can get bigger and bigger. And then it's all about capital allocation, you know? At the end of the day, you have companies that are like a Berkshire, where their whole thing is holding other companies, literally, okay? And so when you look at Adobe, if they're a good capital allocator with the ARR that they are generating, and they're putting it back into their own business at the moment, which is also generating more ARR. Yes, it's slowing down, but it's 12.5 with the acquisition, and even without, it's 10.2%. That's not bad. That's not bad for a company that has been on for 30-something years. And I think a lot of the reason why it dropped by quite a bit is the Dan Dern leaving. Realistically, to me, if he had left for no reason, then it's like, oh, okay, that's a problem, because there's also a CEO transition going on. But like, he left for Matrel. Matrel is literally a company that Jensen Huang said was going to be the next $1 trillion company, and then it grew the size of Adobe, and like, which is around 83 billion of market cap. Dude, it grew by 80-something billion of market cap in like a week after that statement. What are we talking about? This is like, oh, he left silver for gold. Oh no. You know what I mean? That doesn't mean that Adobe's not good at all. I'm not saying that Adobe, I think Adobe's a value play. That's what I think. I don't look at Adobe and go, that's got the most solid moat and such, but I do think that it's completely overblown, and I think that Adobe will keep having good quarters, and the multiple will just adjust itself back to what it was, to like a Salesforce range, like a high teens to low 20s, and I'll 2x my money. That's my play on Adobe, to be honest. If once Adobe goes back up by quite a bit, I'm not necessarily going to stay, because I do think it's quite mature of a company. But with these like freemium model that they're rolling out, I do love that. I do love the innovative aspect, and it's forced growth. It is forced. They are forced to do that because the market is evolving, the consumer is evolving within a market that has AI, which can simplify these kind of although Adobe has a phenomenal creative ecosystem, AI is able to make their like moat in creative work less strong. Now, here's my thing. When you talk about their government contracts and their business, they have a network effect where it's like no one's gonna switch for fucking Gemini, okay? No legitimate business is gonna go, we'll do our creative work with Chat GPT instead of doing it with like Adobe. Because all of the people in the last 25 years and 30 years and all of that, they've been trained on Adobe for creative work. Adobe's the go-to. Adobe, you have these like Adobe, how to use Adobe Firefly, which is like a 30-minute video on YouTube, and like all of these things. People are trained on Adobe. No one goes, hey, I want to have a PDF reader. Let's go on Gemini. It's like Adobe has all these tools, and business contracts, such business people, they have this network effect where it's like you'll apply to a creative position, and the hiring manager is gonna ask you, have you been trained on Adobe? That's literally it. If you're not trained on Adobe, you're cooked. You're not in this market. It's like, no, but I've been trained on Gemini, man. That doesn't work, man. That doesn't work. This network effect is too strong, and it will always be too strong. And business, it's so important in business. People have no understanding of that, but it's so militarized. You have to standardize things. It's not this creative works on Gemini, this creative works on Adobe, this creative works on Chat. No, they all work on Adobe. Because if this one's having a problem with a marketing thing, it's not like Kanye West and Rick Rubin. It's people who work in marketing. Okay, when we say creative, it's like if this guy has a problem with a certain thing, this other guy that's working right next to him knows how to do it because he's trained on Adobe and he has like a little bit more knowledge. Whatever. It's like Adobe has this network effect you cannot recreate because it's been a household name in this field for decades. So for business, the only group of people that I'm concerned for with Adobe, which could have quite like, if they start dropping like 20% of their like solopreneurs, freelancer that kind of can use like with non like personalized IP and such, like they can just use something like a Gemini or whatever for their creative work, then it becomes a bit of a problem. Like the YouTuber like me, I'm not gonna go on Adobe to edit thumbnails and such. I don't even do thumbnails. I just take a picture of the video and put it on, to be honest, for now. But it's like you're not, and if that group of people starts dropping like, let's say 8% or like every quarter or so, 8% of them, which is humongous drops, it wouldn't be like that, I don't think, but like that would have an impact on their ARR, which would be a problem. But for now, I think they're still very strong in business, in government. I think this is super sticky. They're not gonna leave. I think, as they make a other acquisition, they should be fine. I'm a little bit bearish when it comes to the CEO. That could be a thesis breaker for me. I'm gonna be honest. If the CFO, it's whatever. CEO, like I want to see someone that has a vision for Adobe. And I do think as well, my problem with that is that the way I look at it is Adobe can have a problem hiring a CEO because they've been kind of like a fallen arrow, okay? And that kind of means that, like, as you get paid with stock compensation and such, it's like, okay, yeah, I'm getting paid like this amount, but it's going to be half, and like by the time I am able to like cash it out or whatever. So it's a bit of a problem if the person doesn't have like an Adobe vision. Like it can be a problem. Adobe doesn't have the best market perception on the market. Like the market doesn't have the best perception on Adobe as of this moment, which is a bit of a problem for CEO hiring. It's also a bit of a problem because the CEO, because of that, could be a lower quality kind of executive. We'll see what happens. To be honest, I'm looking forward to being proven wrong on that. But if we have like a CEO, like if they get like a shark, and a guy that's like doubling down on everything that they're doing, and I can see this business like boom, market goes back up, market's hype for Adobe again. Adobe has acquired like great companies in this last report. ServiceNow, as customers, I mean, ServiceNow, Coca-Cola, NHL, other big names. So it's like businesses are becoming Adobe customers, like huge S&P 500 companies are becoming like a part of it. So are we like acting as though these companies cannot use Gemini for their creative process, and it won't be the case in 2-3 years either. I also mean Claude, I also mean Chat, I also mean Perplexity, whatever the flip all of these other business are. They can't use like an AI generative AI that's not like it's trained on specific on IP specific with Adobe, which that sounds a little bit Chinese even to me. But I know that it means something good, because normally it's not the case with the other ones. It's actually the only one right now, which makes it kind of a moat within their generative AI solution, and it makes it like for like conformity and like everything all like within a corporation and such. It's easy to integrate with that, and I think it's gonna keep growing from a business standpoint, like from a business customer acquisition standpoint. I mean, so my bearish points are the ARR not growing, is the freemium, like when it comes to the freemium execution, is it gonna be able to mitigate that? Then there's also CEO transition. That's another point for me that I'm a little bit like I have my concerns about. It could be a thesis breaker completely. Market perception. Now there's this other thing as well for me. I think that if Adobe is perceived in a way where people still hold the idea that it's going to be disrupted, like the average Redditor is like, oh, it's going to be disrupted. Anyways, it's going to be in this kind of position where it can go down to like a 8.5 like of P and like a 6 point something of forward P, these like 5x. It can go down to these kind of numbers, but and that would be bad. Like that would be very bad. But if it does, and the earnings keep being like they are as of this as of right now, like the past two earnings, I think I just buy some more shares, to be honest, because I'm like, what are they seeing that I'm not? I'm tweaking. The only thing is like the market can stay rational longer than you can stay solvable. So I'm not saying like put all your money, and I'm not even telling you to open a position. I do think right now is a good entry price, because I'm like, but I do believe it can still drop some more. So that's another like bearish point I'm bearish on, because if the company is like, okay, it's not being disrupted, but at the same time it has trouble like growing, because it's kind of mature. It has trouble like to keep growing. Their AR keeps dropping unless they do like big acquisitions, which is money out, etc. Fix the balance sheet, all of that. then it becomes one of those things where, okay, well, I'm at 240 price, okay? If it goes down to around 8% of 8 times P ratio and it reaches like 130, how much is it gonna grow every earnings by going up like 8% and then going 7.8 and then going 7.7 and then going back 8.1, but because of an acquisition that affected the balance sheet, and that it's like, how much is it gonna grow if it does stuff like that? You know what I mean? I'm not gonna I don't think I'm necessarily gonna make my money back, and I don't think it would be worth it for me to stay within the company, like to keep my money in there. I'd rather put it in like even an S&P 500 or whatever, like or like a Microsoft and a Meta, Amazon, one of those stocks. That's how I look at it, and that's something else I'm bearish like that. Those are my 3 big bearish points. But overall, when it comes to whether I think it will be disrupted, I don't think it will. I think at least on a business level, it's gonna keep growing. I think they can make key acquisition if they can make good buybacks and such. Right now, I say I'm not bearish on CFO, but I kind of am. I understand that if he doesn't do buybacks and such, and they get put themselves in a position where they're gonna be more conservative, I'm gonna leave this company in the dirt. I'm gonna be like, hell no, I'm not dealing with that. I want like young blood that are gonna be hungry to prove that they're still in the game. And so we'll see what happens with that. That's about it. I think CFO buybacks, point of no return when in stock price, CEO transition, and I had another one. I can't remember. Right, the executive execution on the monetization of freemium users as well. Now, I'm making this video. I'm sounding super bearish, but realistically, I think that if they keep growing like this, the multiple should readjust from 11, as though it would be completely disrupted. Not completely, because I said it can still go down, and I believe that it can. But I do also believe that it should go back up right now to a not ServiceNow. ServiceNow that's a crazy P ratio, but with phenomenal growth, so it's normal. But Salesforce, high teens to low 20s, and I think it would 2x with that, go back in the 400 kind of price range. I believe in Adobe doing that. I just don't know. Yeah, I'm just not sure where we go from this. It's not clear to me the directions. I will keep following the next couple earnings, and I'm gonna do earnings breakdown. I couldn't do it with the last one. I didn't. I didn't do it. It's not that I couldn't. I decided to cover Guru instead, which wasn't necessarily the best move. But yeah. Thank you for watching the video, guys. It was a long one. I hope you liked it, and make sure you subscribe to the channel if you wanted to see more breakdowns. I'm gonna keep breaking down, especially the companies that I own. I'm gonna do a earnings breakdown for every single one of them. I'm gonna do a portfolio review at some point. I'm gonna wait to have like a couple followers, because for now, dude, it's 1 subscriber and like 2 lurkers that come in, watch 5 minutes of the video. So it's like one of those things where I'm talking to myself. I'm watching my videos more than you are. So yeah, we'll see how this community grows, and don't buy IPs. Thank you.